Is it finally time to start looking for shorts on the euro? I'll have the details in today's video, including key levels to watch on the euro USD and also the latest on the DXY. So guys, the euro USD weekly time frame, everything in this video, I want to start here because this frames the entire video, because everything that's occurring on the euro here for the past few months is all based on this channel that goes back here toward these highs and lows going all the way back to 2022. So you can see we have these two lows down here. We've got this high up here, making this an equidistant channel. Now, what you'll notice is that months ago, the euro actually tested this level, got rejected from it, pulled back, and then came back up here and tested that high once again, even took out that high, testing this area back here that we discussed in these videos. So right around 119, okay, this was resistance back here for the euro that we talked about going into FOMC. And sure enough, we are seeing the euro USD pull back here significantly over the past couple weeks. Now, one thing I talked about in the weekly forecast was the fact that this upper wick here, okay, from last week could serve as a magnet for this market. So you've got this long upper wick here. And as we know, markets tend to fill in the areas like this. Look no further than stuff like this back here. You can see this lower wick down here. The market came back, filled this in partially. And then over the past few weeks, this has just been a very range bound market. But notice every single time we got these lower wicks, the market the very next week filled those in partially. Okay, so this was no exception. Same exact thing here so far this week. We saw the euro come up here and test this area. And in fact, what I've talked about in recent videos too, and I haven't looked at this yet, but I'm willing to bet that the 50% of last week's wick is very close to this week's high. So if we take a look here, pull out our fibs and draw from this high up here from last week's high down here toward this level right here, which was last week's close, you can see that the 50% of this comes in right up here in this area. Now, we didn't quite get there, but very close to the 50% so far this week. Okay, so that right there, guys, you know, as I've said in recent videos, this up here was resistance for the euro, still is. And so far this week, we're getting a rotation lower. Now, let's talk about the daily time frame here, because this really sets the stage for what's happening with the euro USD and whether or not we are going to get that significant reversal. So this diagonal you see up here, this level is the top of that channel that we just looked at. Okay, so you can see where we had the high back here. This was that first rejection. The market spent a lot of time going sideways through here, but came up, took out both of these highs, and now it's reversing lower. However, the key here for the euro is going to come down to this level right down here, this trend line that you see. So as of right now, I do want to be clear that as of this video, I'm not calling this a confirmed breakdown. However, we have the makings of what could be a significant reversal for this market, simply because, again, if you look at this, this is a long-running ascending channel that goes back here to 2022, the high from 2023, and so far the market is breaking back below this 118.30 area. So what I talked about in recent videos was that we had this high from back here, and you can see where we got the close above. We had FOMC, that rejection from 119 that we talked about. And then, of course, we had the market closing back below this. So this up here, guys, was the challenge that I mentioned in the weekly forecast. This was the challenge for Euro bulls to get back above this week. Okay, so we saw an aggressive bounce from this trend line, which we'll talk about here in a moment. But we saw an aggressive bounce from here. However, the market was never able to get back above here. Now, obviously, it still could. Okay, the week isn't over yet. We could see the market actually reclaim this area up here in the, above 118.30, but so far we are seeing that rejection from here. So for the euro USD, what this is going to come down to is, can it get below this trend line? Now let's talk about this trend line here for a moment, because this is going to be critical for the euro. Now we've discussed this in recent videos, but if you'll notice here from this February low, now this is a bit of an odd trend line, I'll admit, because we don't have touches off of these lows. However, this could look invalid until you look at the recent price action since this low. Because what we have here is off of that February low. If you look at the last few months here, we have the euro bouncing every single time from this trend line. Okay. Now you could draw this a little bit differently. You could include this low back here. However, I want the most conservative placement possible. In other words, I want this level at a position where if the euro does break down, I want there to be no question that this market has officially broken down. And for that, this placement that you see right here is it. Okay, in my opinion, this is it, because we're taking the very low of these candles. Okay, now again, to be clear, there are still several hours left in today's session. There's 6 hours left. Okay, so keep that in mind. The euro could still close above this level today and just stay range bound here this week. Okay, so if you are going out there and shorting this now, I think that you're I don't want to say playing with fire, but you are, trading a little bit riskier, because again, we don't have that confirmed breakdown just yet. We do need at least a daily close below here, and really a sustained break, between today, tomorrow, etc., to really get that push lower. Now, on the other hand, if we see the euro recover back above this level today, then it stays intact as support, and we've got resistance up here around 118.30. Okay, so that's what I'm looking at now for the euro. Obviously still very sideways following last week's breakdown below 118.30, but we are seeing the first signs of that potential reversal. Again, this was a big moment here for the euro going into FOMC that we talked about, just because that was a very long running resistance up here for the euro USD. Now, if we do get the breakdown, okay, let's talk about this next and then we'll get into the DXY. But if this is going to be a breakdown, all right, the areas that I'm watching, obviously this right here is your range for the euro. Now keep in mind, again, once the market broke back below here, this is technically a failed breakout, okay? This was a failed breakout last week. We saw the retest of it right here. And this right here is your range, okay? So you've got range highs up here. You've got essentially what is the mid-range in this area, and then you've got the range lows. So you also have a poor low right down here around 1.1564. Now, yes, that is a real term. Google it. You will see that that is also called an unfinished auction. So what that means is, in TPO terms, time price opportunity, what it means is that the price action back here, okay, the market profile at this time looked like sellers were not finished. So there is potentially unfinished business here and also down here at 1.1440. Now, the reason that this lower one is potentially significant is because this is a single print. So if we look at the 30-minute time frame and go all the way back here toward this price action in early August. So this was August 1st. And what you'll notice here is that we had a very aggressive move up here from the euro. And we talk about this a lot, but notice how you had this congestion right here from the euro. The market broke out and never returned to it. We got a partial retrace into this, but we never saw the market come back here and test this area. So that left this imbalance down here at 1.1440. Now, oftentimes these do act as magnets for a market. The same thing here with this poor right off of this low, right through here, you've got this one, this poor low, and then you have that single print, that imbalance down there at 114.40. So guys, these could become magnets. Now, here's the thing about looking at levels like this and calling them targets or magnets, is that right now, these are protected by this level. This trend line right now, like I said, we don't have a confirmed break just yet. So what that means is that levels like this down here are protected by this support, because we don't have a confirmed breakdown until we see that daily close below here, right? We need that daily close below here, preferably a retest up here, new resistance, and then get that push lower down here toward these lows, okay? So that is that for the Euro USD. Now let's take a look at the DXY here, the US dollar index. And as always, guys, if you are enjoying the content, if it's helping, subscribe to the channel and also hit that like button. Now, looking at the DXY, let's go to a monthly time frame. We'll start here because this is what we've discussed in recent videos about the US dollar index. Now, from the slowdown here in 2011, you can see equidistant channel right off of these lows and also these highs. So at the moment, we are seeing the DXY come off this level. And this is what I discussed during FOMC week, where I was saying that you had to be really careful getting bearish on the US dollar. And in fact, I didn't think that there was any reason to do so, just because it was very risky getting bearish on this market as it came into those poor lows around 96.60. Sure enough, this was your FOMC candle. We got the reclaim of this level, pushed right back into 97.7 resistance. And right now today we are trading above it. Okay, the DXY is above it. Now, just like with the Euro USD though, what this is going to require, in my opinion, is a sustained break back above 97.7. Okay, so this day is not finished yet. We do not have confirmation yet that the market has flipped this area to new support. Furthermore, notice this candle right back here, right? We actually had two daily closes back above this, or what looked like, reclaims of this range. And then the market just pushed lower. Now, a couple things. First of all, we had FOMC, right? So we had FOMC down here. And so that could have just been the market coming down here to take out those unfinished auctions and then, test that 2011 channel support and then bounce. Okay. So I'm not saying that this right here was a, quote unquote normal circumstance just because we had FOMC coming up. But what I think this is going to take from the DXY is a weekly close above here. So again, long lower wick. We know these tend to get partially filled. We saw that this week. So if this week closes above 97.7, right, that would essentially be a reclaim, right? It would be a reclaim and expose 98.6, all these highs back here. So that's what I'm looking at for the DXY, guys. If we have a sustained break back above 97.7 on the daily, I think that would be the start of a reversal, okay, a bullish reversal toward 98.6. But I think you really need that weekly time frame close above 97.7 to really confirm things here for the DXY. But all in all, if this market can start to show a bottom here, I mean, it has a ton of potential, okay, a ton of potential. If nothing else, I think that we probably see over the coming weeks the market come up here and test these lows if the market can find a bottom down here. And that's simply because you can see here with the breakdown, we did get a retest through here. However, you have this long upper wick back here. You have this imbalance around 99.88. And then you also got the area around 100, that big round number. This could become very interesting here for the DXY, but it really comes down to 97.7 as of making this video. If we get the sustained break above, I think we target 98.6. And of course, for the euro, once again, this level is serving as support. Notice how, since I've been making this video, guys, the market is starting to creep back above that level. So no confirmation just yet. You have to wait. You have to stay patient here. Wait for that confirmed breakdown, because if the market holds above here, we could just see it return back up here toward resistance. So the last thing you want to do is be shorting this early, right, before you have confirmation and getting stuck on the wrong side of the market, taking an unnecessary loss. So just stay patient here, guys. Wait for that confirmed breakdown on the daily time frame. And then, like I said, if we get the sustained breakdown here, preferably retest of new resistance and then that sell off. Otherwise, if we stay above here, the market is range bound, and we have that potential for the market to come back here toward resistance if we don't get that confirmed breakdown today. But certainly one to watch here, guys. The market is starting to finally get a little bit interesting after weeks and weeks of just sideways chop. All right, guys, that's it for today's video. Subscribe to the channel, hit the like button. Also, if you want to join us in VIP Discord for my help with your trading, seeing my trades live, also VIP only videos and real-time market updates, see the link in the description of this video for 85% off. Trade well, guys. I will talk to you again tomorrow.